In 15.1, we went over the building blocks and the next steps that are going to make you a profitable trader, right? As I said before, you don't want any one of these building blocks that go step by step from top to bottom to be impeded by, or what word did I use? To be murked by the skipping of prior ones. The traders that I've seen skip any of these, and it's always the same story, end up falling short, end up having emotions step in and creep into their own systems on a live, either in the beginning or later on, right? And inevitably lose whatever profit or success they end up having because there isn't a solidified backbone behind everything that they do. What you're doing right now is you're building guaranteed safety nets and guarantees of your own profitability. Those are the most important things you can do. So in doing so, what I want to do with the next few videos is I want to exemplify these building blocks, give you a little bit more information, and give you a tangible thing that you can start using right now to get even better at your own trading. So the first place I want to start is to start on the building block of system. You already have close to everything you need in regards to system, thought processes behind a system, entries, the way to judge where you are, and of course, showing up to webinars, reading the trade updates, reading the trade ideas, interacting with the team is all going to be extremely valuable to you as you continue to progress. Now, the next step of system is this right here, and you will have access to all of this information. I will actually give you guys this right here so you have it. It's going to actually come as a case study template, and you're going to be able to start adding your own information in here. It's all going to be possible for you. But to do that, I want to start by talking about the full system schematic and the understanding behind it. So where it's going to start is in a very simple place called the supply line and runs on supply. So this is ultimately what the entire Mentafex understanding and your own entries are based on. When you understand this concept right here, it is going to transform the way that you view your charts. So the supply line is ultimately this line right here. It's, well, okay, hold on, sorry. It's this line right here. This is what I would refer to as a supply line. Now, again, the entire portal material is taught from the perspective of a buy side. You would, of course, flip this for the sell side. So simply, this would now be a demand line, right? You would just flip it. Price comes down, comes up, continues. That could be the demand line. But we are going to talk specifically about the supply line. So that's this right here. This is going to be the supply line. And we're going to talk about that one right now. Now, the supply line is we'll start right here. So the supply line itself, which is this right here, and you can imagine like, a few candles up or whatever, and then maybe like, let's say 2 candles down like this. So if I'm looking at this, right, the supply line itself, so if this was the supply line, it is nothing more than a simple pullback on the V, and you can also include the C because, the way I want you to think about this more so is for the momentum cycle. Okay, it's for the momentum cycle timeframes. So what the supply line itself is used for is a simple measure, or basically just a containment. And you'll see the reason I use the word containment in a second. It'll come up in a second. You kind of have this little word that I'm using as containment. But what it's basically doing is it's, and right here, right? It's a containment of the pullback. So the supply line itself is nothing more than a pullback on the momentum cycle time frame, usually used on the V. You'll find yourself using this on the C2, and you'll see examples of this, and you can go back into the portal material that you've already gone through and see examples of this, but it's on the C as well. So ultimately, the supply line itself is a containment of the supply that is entering the market, and then as it slowly transitions into demand and becomes a reaccumulation, right? So what's happening in the market, and we've spoken about this multiple times, is you might have some initial buying, right? Whatever, it might be big buying. And then as selling starts to come into the market, let's say something like this, right? So as selling begins to come into the market, what's happening is that selling is instantly met with demand, right? So what's happening is the supply or the selling is being contained by some kind of funnel, by almost like a pipe, almost a drain, right? So whatever selling is coming in is being contained by buyers stepping in. Those buyers are the buyers stepping in with their algos, with their institutional knowledge, with their ability to pick up orders, whatever it might be, through the rising 5, 10, and 20, right? Rising 5, maybe 10, maybe rising 20. And as supply comes in, as sellers begin to come into the market, selling is not able to overpower this market in any way, take it significantly lower or anything like that. So simply the selling exists inside of what we can call a containment. The buying allows that containment to be clarified, right? It creates kind of a point through which if price can get beyond, we've basically began to fully demand. And you'll see more examples of this in 1 second. But basically what's happening is the supply is being contained through the supply line, that being this line right here. Okay. And so this is the containment of the supply entering the market, which is slowly transitioning to demand, right? Because you have the buyer stepping in, stepping in, stepping in, stepping in. So it's slowly transitioning into demand. And then what happens is, as the same thing as a stage 2, right? So if you have a stage 2, then you have a stage 1, and then you have another stage 2, right? What's happening is we are containing the supply inside of this area. So if you notice, the supply line is simply a refinement of a stage 1. It's a way to view a stage 1. It is a stage 1. It's just a way to refine and demonstrate where that stage 1 is occurring and where the highest propensity for a stage 2 is likely. So a stage 2, or the buy order demand point, which will basically be the line through which if price kind of passes, right? So if you imagine these candles, right? If price passed this line at any point, very clearly some kind of true demand has come in. So what we can call it as a buy order demand point, which will just simply be through a high. And you're going to see examples of this in a second, so don't worry too much. You're going to have all the examples you need. But very simply, you have a supply line. Price might be inside of that supply line. And as price crosses through the threshold of that supply line, so basically anywhere inside of here or through it, that's what you could call the buy order demand point. Or very simply, that's where the true stage 1 was, and a stage 2 is now very likely happening because we've come beyond that point. So think back to the way that you might view an accumulation MB, to the way that we kind of label accumulations MBs. You know, maybe there's like a candle like this, even if it's tiny, that move right there might validate this as an accumulation MB. Okay, in terms of portal labels, right? And similarly, you have the same thing that's working with the supply line, and it's mainly used for the pullbacks on the VNC or the momentum cycle timeframes. But ultimately, this defines kind of that stage 1 because it's basically a market that has been going, it starts pausing. The stage 1 is basically like this whole area, but we're defining it through a clear area. And as price breaks beyond the containment line, this is the containment of supply or the supply line. Stage 2, or the buy order demand point, so kind of through this point, is unable. So the prior contained supply, which is this area here, so this supply right here that was being sold into, so the market sellers that were coming in during this time are unable to keep the prior contained the prior contained supply, this supply, is unable to keep remaining as supply. So this currently ongoing supply is no longer able to keep putting supply into the market, right? Demand is basically eating up all these orders in such a large way that it is begging to go higher. And in this case, across the EVC or whatever it might be, or across specifically the fact that we're here on the 20 or the rising 10 or whatever, and you have the line above, is basically unable to contain this move whatsoever. So it can't be contained. And demand is clearly coming in. So demand is clearly the thing that's overpowering the supply that's currently in this market, right? The demand is eating and buying all of it up. And as we get through that buy order demand point, or we kind of come out of there, that is your clear stage 2. And beyond that point, you have what we call a potentially delivering reaccumulation, right? Because what's happened is as price has sold off, within a prior existing accumulation, it was reaccumulated through all the new demand that stepped in. And now, with a potential reaccumulation as price maybe is right here, you have the propensity for a delivery. And what's really interesting is this area right here is almost always, just so you guys know, the double MB, or 2 accumulation MBs, or whatever you want to refer to it, 2 accumulation MBs or 3 accumulation MBs, etc. Right? That's where it's happening. It's happening right beyond that line, or even on the line, which in itself would be the clarity of demand coming in. And I'm going to show you examples of all this in a second to make it even more understandable. So the reason I personally draw it, the reason that I personally, when I'm actually analyzing charts myself, when I'm looking to trade things, the reason I personally draw it, let me show you an example on GRRR. Okay, I actually have GRR open, and you'll see that when I traded this, so I did trade this back here, It looks like this doesn't have it saved. Maybe I open like this. Yeah, I have a lot of markings on here, so it's all over the place. But if I show you a lower time frame, I did trade this thing inside of here, and I'll jump down a little bit lower just to showcase that, so it can be very clear. I took a break even here, a break even here, and you'll see, yeah, I took another break even here, a -1. I took a loss inside of here, and then I took this really nice little win here. Okay. Now, again, ignore all the stuff in front of you. Let me just go like this. But so the trade was basically inside of this area. And if you notice, if I go to the 65-minute, which is my entry time frame, as it's been used as a few examples in this video, right? This is where that entry is. It's right here. The entries weren't here. What you'll notice is the entries that I'm taking on the entry time frame now are beyond this line of containment or this supply line. And what you'll also notice is that a double MB set up just at or above the line of supply, right? So again, if an MB even set up right there on that candle, so if it started setting up right there, this would be a perfect example because it's setting up at the line of containment, which means if we come through that high, it will be beyond the line of supply, beyond the line of containment. We can call it both. So I actually want to make sure that you guys know the supply line can also be called the containment line. So if you hear me refer to it as that, that's what's actually happening. Okay, so this is the supply line, and what you'll see is that even in my own charts, I draw it, right? So if I go to my validation time frame, there it is. There's your little drawing of this specific pullback, right? And all I'm doing is I'm putting the lines on it. You can see I even had one here where I did the same thing. If I show you that setup itself, what you'll notice is that in this case, the double MB set up right above this line of containment. And again, that was the demonstration that we're likely entering a stage 2 from the existing stage 1. All right, so we're assuming the stage 2 through that point, and that's why I traded it. So that's just a real example of something that I've taken recently, but those are examples directly of me using the supply line or drawing it in. Again, it's still the same thing. It's still an MMB. It's always been. The labels are all the same, but all I'm doing now is I'm putting this little thing over that pullback. Okay, and that the reason. So here it is. The reason I draw it is because it defines the move for me. It contains the E. So it contains the entry time frame to an acceptable place to purchase the underlying accumulation. And it provides an E micro framework to what a move tends to do before running a high. See the right image. It defines what the stage 1 should be doing on a clear move. So now we're going to go and do this right here. It provides an E micro framework to what a move tends to do before running a high. Let's see what that even means. So the first thing I want to tell you guys, just write this down, use this for your own case studying, and we're going to do examples of case studying as well, is try drawing these, right? So just try drawing this line or whatever on a V. You'll just get really used to it and then study what it looks like on an E or an E micro. Okay? And the way I want you to think about this, sorry about that, my computer just had a little spasm. The way I want you to think about this is that this is a preventative measure, or it's a measure that can help stop you from trading during the containment or stage 1 period. So what I mean by this, and what I've seen happen to a few traders, is they will actually force things so quickly that, you know, they might see something like this and basically preemptively say something like, this could be an MB1 and this is my MB2, right? And I mean, again, like this is a bad example because it's not perfect, but if someone did that, theoretically, this isn't not a double MB. But at the same time, at this point, this might not be the best area to purchase because you haven't even made your way through, nor are you at the line of containment, right? So taking a trade in an area like this may lead to more chop and more losses before you get the true move or have a move that's ready, right? Because what can happen in an area like this, on the other hand, of it working, right? So in this case, it kind of worked. But what can also happen is if this is the line that it currently exists as the line of containment, so here it is like this, if this was the line of containment or so, right? What can also happen, and as a lot of you should know, and as you will see in your own testing, is price can go, tap you in, never do anything, right? Come down, maybe then start another one like this, right? Maybe look like another setup. Maybe the line of containment becomes this, and then you might take another trade here, might do this, come down, right? Flush out, and then it might come up, right? Pause, and at this point, it will be on or beyond the line of containment, right? Because if you kind of draw a parallel not a parallel, but a horizontal line at these points, right? If you just keep drawing it forward, at this point is the only point that you truly have a setup or an accumulation MB or some kind of action that's now being built up outside of the line of supply, right? Everything before that, if you had bought it, so a buy stop here, a buy stop here, here, right? So I'm just thinking about buying, I'm actually doing it like this. So a buy stop here, right? A buy stop here, a buy stop here, a buy stop here, right? Well, this one would work because it ends up being the low. But what happens is you open yourself up to a lot more chop if you trade before the true stage two or before you allow price to demonstrate the stage two to you. Stage two to you. Yeah. If you don't allow price to demonstrate that a stage two has likely come to its point of occurring, right? Because this would be that point that kind of creates the supply over or the demand overriding the supply where you are ready for a move and a run on a potential high and onwards and a stage two of a higher time frame, right? If you trade everything in between and everything before, what happens is you do open yourself up to being chopped up, right? So that's a very good example of how now with your added or with the underlying understanding you already have, which is that your entries can be MB into accumulation MB, MB into double MB, MB into FFMB, MB into FMB, right? Wick into wick of MBs, because these are all potential demand validations that could act as opportunities, right? With that, you now have the added understanding that just because it's happening doesn't mean it should be taken. The question now becomes, where is it happening, right? And what's beautiful is you can layer that within your underlying understanding of EVC and looking across timeframes and whatnot to get your entry even better. Okay. So, and to give like another example of this, maybe I can look back to, is it NVIDIA that I traded? I don't remember every single thing that I traded. I just know this is an example I've used multiple times because it's been something I've traded that's been really, really good. But like this trade is something that I traded as well, right? I traded through this line of containment right here, right? I literally traded it like somewhere around here. So maybe I can look at this as an example. So if I go back to this area here, right? And again, we can kind of do this as we're here in front of you guys. You know, you had the stage one, the move out of that stage one for what appeared to be an accumulation MB, kind of around this area. So if I had to label all this, right, very simply accumulation MB on the daily chart, then whoops, accumulation MB on the daily chart. Then you had price move higher, pause, right? Same exact thing, line of containment, supply line, pauses right into the rising averages or right at the averages. This would be your MMB1, this would be your MMB1. Then this would also be like an MMB1 or MMB2, doesn't matter. Both are valid because they're happening under the same kind of range or within the same range. So both are completely valid. All right, but if I now jump inside of this, as this is occurring, because I've now drawn my supply line, this is a great example of exactly what I'm talking about, right? In this event here, if I'm a trader that's kind of willing to trade anything, right? Some of you may even say that like buy stopping here could be worth it, right? And the reason for that is because if some of you are watching an E-micro, like a 2-minute, right, what you'll notice is these points do actually provide potentially viable and buyable longs, right? There could be a long here, well, this would be the MB1, or a long here. And you can see that taking a long through this high, if you're entering this E-micro, right, would lead to, and you probably have a bigger stop like that, would lead to, in this case, very likely a loss. It could lead to a break even, potentially, but it would lead to a loss. And in this case, it's because, if you notice in this case, right, price has not made it beyond the point of containment or isn't setting up the move at the point of containment, right? If instead you had taken a buy stop through this high, which would now be a point at which this would be beyond the line of containment, this would be a good setup. And notice how in this case, it just wouldn't have worked. And if we keep following along in that same way, right, this right here is a buy would be a bad purchase because again, or this one here, right, all these range highs, and we're going to talk about this specific thing for E-micro as well. We're going to break this all down. So if you're confused right now, it's perfectly fine. This is all going to make sense, but we're just thinking about the supply line right now, and this one's being drawn from the validation timeframes sideways pullback, right? So if I'm buy stopping here, I'm getting in and then I'm losing. And all I'm doing right now when you see me draw out these red lines is I'm drawing out these gray lines that are being drawn by the Mentifex indicator, and I'm just drawing them out further. So if I buy stop this now, right, I get tapped in, and I might take a loss. Then if I'm buy stopping this high, which is also a possibility, and now I'm waiting, and I get buy stopped in, what happens? I get stopped out again. So what you'll notice is if I'm simply buying any MB or any demand zone, demand point that's setting up, because again, remember, across higher time frames, these are all potential double demand, right? MB1, FMB, or FFMB, or MB1, MB2, or MB1, MB2, right? Those all might exist. If I go to a 65-minute, you might see that. So let me show you. Here we are. Right, so it might not be perfect, but some of you would look at this action right here and say something along the lines of clean stage 2, beautiful flush to the 20 or to the 2 or below the 20 EMA, MB1, MB2, I should be buy, or FFMB1, FFMB2, as per the portal material, I should be buy stopping that high. And if you buy stop that high, right, it leads to a loss, then might lead to a bigger loss. Right? Or you see this high and you say, okay, I want to buy stop this overall high because we clearly have maybe an MB, whatever, an MB1, MB2, and that's what you buy stop. But again, these setups are all now occurring or happening under the line of containment. And because they're happening under and not at the line of containment, the purchase or the entry is bad, because what's happening is you're still entering during a time of supply coming into market, right? So very simply, if supply is still coming into the market, let's just say this is 3 candles. Here we are, 1, 2, 3. Let's assume this was the V time frame, all right? And then we went and looked at this on the E, right? On the E, what's it gonna look like? The initial push up might be a stage 2, and then it starts to flush out. Maybe it flushes out like this, right? And then you kind of have this move right here, right? Inside of this, you now have to understand that if you're taking buys in any point here, just because you think you see an accumulation or a clear demand point, or you saw a wick that you can throw a buy stop above, or you see a candle that looks really good, you're like, I want to buy stop this candle, but it's under the point or not just at the point of containment, then what's going to happen ultimately is you'll open yourself up to more choppy action, right? Because you can now be wrong more often inside of an area than allowing for true demand to come in. So this is one of the main reasons that I personally draw the supply line or the containment line, because it gives me that value, right? Same thing goes here. All of these, buy. You could even look at the ones inside, right? A buy above here, a buy above here, a buy above here, a buy above this little range right here. This buy would have been a loss, this buy would have been a loss, and this buy would have been a loss. All because you didn't wait to the line of containment. And then what happens? As price pushes up, at this point, you could actually set a buy above this line right here, because at this point that the setup here is happening over the supply line and over the line of containment. So this becomes a valid place where you can buy, and guess what? Instead of giving you an entry, it falls off. And we can keep following this same example forward, right? If you now set a buy here, you get in, you might take a loss. If you set a buy here, you get in, you might take a loss, and there it is, right? If you set a buy even here at this high, right? So again, if you set a buy through this high, you are opening yourself to the same problems, because what's happening is you're now trading under the line of supply. You're trading within the supply that's currently coming to market, which means any buying or selling will result in potential chop, right? And this will be true against any time frames you trade. This would be specifically for an E-micro of a 65-minute entry. So what's happening is any 65-minute MB buildup right now, if this was 1 and this looked like 2, it's not worth taking. MB1, FFMB2, it doesn't matter. It's not worth taking because it's now under the point of supply. It's under the containment line. So I wouldn't buy any of these, right? And if you keep going and you keep going and you keep going, all of a sudden you get this. And then again, you have an opportunity or an option, right? I would not buy here. At this point, you have now a point, a buyable high, let's say, that is above the point of supply or above the containment line. And this could act as your first area where purchasing might be valid. And look at what happens kind of beyond this high. Okay, the setups that do set up, so again, if I kind of draw this line out, right, at or above, so think about this entry or this entry. These can all act, there we go, or this entry. These are all now above the line of supply at or above the line of supply that's coming from our validation time frame. That is the pullback, right? Remember, all of this is simply that move, 1 or 2 candle pullback, 3 candle pullback on the validation time frame. That's it. That's all that's happening. But we are looking at it through the lens now of an E micro for the purpose of explanation. Okay. And you can see in this case, it doesn't even still prevent you from necessarily not taking losses, because again, in this case, we're just looking at an E micro. All right, let's move back to the 65 minute just for a second. I'm going to show you guys this. I want to kind of move it slowly. Here we are. Right. So beyond that point, that line of containment, you can see that if you're trading a 65 minute entry and you're just trading 65 minute entry, this double MB right here might be one worth purchasing, because now what's happening is the setup is happening at or above the line of containment, right? So this can become a setup, or this right here, MB1, MB2. Is this a setup that could be worth taking? Looking at it, I think the answer is a clear yes. It's above the line of supply. It's at or above the line of supply. So again, think about the buy. It's clearly up or above the line of supply. The line of supply is like down here at this point, right? Down here somewhere. So this is clearly a fine purchase, and it's happening in terms of what I would want to see from a double MB. And funny enough, this is exactly the high that I personally bought on NVIDIA. This is the exact market I traded. That's why I use it as an example. This is the exact high I bought for this move that then went on to do like an insane run. It just went crazy, went into a clear stage 2, right? And what's really cool is that if we keep on looking at the 2 minute, right, what you'll see beyond this point is those same Bible highs. Some of them don't work, as you can see, right? Some of them work and then they work out and then they go to a break even, and that's perfectly fine. But what you'll notice, very, very importantly, is that these highs become buyable highs, and those buyable highs provide opportunities that then deliver a trending market. And these could all act as their own purchases because this is an E micro, and we're going to talk about the principle of buy stopping a high. But what's happening is we're buy stopping MBs or highs, right? These would all be those points above the line of containment. And that line of containment is very simply that pullback defined. That's all it is, right? So again, this is the supply line. It's nothing more than the pullback of the V or the C, or basically the momentum cycle time frame. On the momentum cycle, when you have that pullback, you can draw a line of containment. I personally draw it because it defines the move and it clarifies where the move is. It contains the E to an acceptable place to purchase the accumulation from, and it provides an E micro framework to what a move tends to do before running a high. Okay, that's where we're going to talk about this next, in terms of how it builds up a reasoning behind true demand coming into the market and what every single market actually ends up looking like. That once you understand, you will open your own eyes to all the opportunities present on the assets and the timeframes that you trade. So I'm going to show you this in the next one. But I wanted to make it very clear that that is what a supply line operates as. It is simply defining the move that is going sideways, nothing more, right? This would be the supply line of this move here. This is a move I'd gladly trade because of how it looks. This would be the supply line of this move here. This is a move I would gladly trade because of how it looks. Same thing goes here. This is how I would define the supply line of this move here. I would gladly trade it. I know when I go inside of this, if I was to replay to here, I know that inside of this, on a 65 minute, you have a pullback or a flush to or under the 20, probably just to, or maybe even above it. And then you have the buildup of accumulation at or above the line of containment, at or above supply, right? So if I go to a 65 minute supply line, that's exactly what you'll see, right? MB1, MB2, just below the line of containment. Maybe you skip that one for that reason, or MB1, MB2, clearly above the line of supply, clearly at or above the line of supply, above the line of containment. You could even maybe spiff it up and say there it is, perfect. So buying this high or this high are completely valid, and there's absolutely nothing wrong with that. And this could be a trade, and this could be a trade, and these could be valid trades. Or if we drop into the 2 minute, which would be the E micro, and delete those, beyond the line of containment, beyond the line of supply, you have buy stoppable highs. That's a buy that would end up potentially as a loss. That's a buy that would have ended up as a winner, right? That's a buy that'll end up as a winner. A buy that might end up as a break even or a winner, depending on how you follow your rules. And you can go inside if you really want and take some of these like crazier ones. These do end up being big winners, but I don't know if you would have ended up taking them. But again, this is the principle of buy stopping the underlying MBs and ranges within those areas of the E from an E micro, but is not necessary, right? So you have the 65-minute, and again, like I said, a double MB, that same setup. Simply, it still is the exact same thing. You have a flush, you have the buildup of accumulation, and you already know that there are rules that you can use for your own understanding of which accumulations are worth buying or which MBs are worth buying. And some of those rules you've already understood to be wait till it's at or around the 10 and 20 EMA, right? Price will flush, let the first MB get kind of built, and let the second one build up like around that MB, but also just at or below like that 10/20, right? Let it build up there, and that can be a valid buy stop. Now you have a third you have an extra reason to now judge whether something should be allowably purchased or needs just a little bit more time to develop. And sometimes those tiny, tiny things of this might need time, or I'm not so certain about this, or I don't like the way the supply line looks here, or I don't think the validation timeframes pullback looks good here. That could be the thing that completely shifts the way your overall system performs. Right. So ultimately, what the supply line is doing is it's just defining, it's buttering up the actual validation timeframes stage one through the momentum cycle. That's ultimately it, right? It butters it up and it allows you to decide if something is worth trading or just doesn't look right. And that example of it just doesn't look right or whatever is going to come a lot from the case studying that you guys are doing, okay? So supply line, otherwise known as the containment line, when you see me draw that on my chart, all I'm doing is I'm viewing the area that best represents what's actually going on with the underlying price and where I suspect if there's going to be a churn of demand or if demand is going to overturn supply, at what point that'll be, which means that's where my entries are going to happen or above that point. That's how that simply works. And we're going to take that to the next step now to understand why that works so well and how it works with the understanding of floating supply and continuations on actual highs. But that'll be in the next video. And let me just make sure I covered everything I wanted to cover for this video. Yeah, draw your containment lines. Start studying what they look like on the E and the E micro in the event that you're already collecting data or doing your case studies, okay? I'll see you all in the next one. Thank you.